Welcome back to the channel. Today we're diving into why gold is making headlines in 2024 and why central banks around the world are snapping it up. We'll break down the current economic climate, gold's performance, and what it means for investors. Hit that subscribe button and the notification bell to stay updated on all our latest content. Let's start with the economic backdrop. Inflation has been slowly decreasing, but it's far from under control. Recent Consumer Price Index data shows inflation at 3% annually in the US and 2.6% in the Eurozone. However, several countries, including Spain, have inflation rates exceeding 3%. This uncertainty is why central banks are either keeping interest rates steady or lowering them very cautiously. Despite this, monetary policy remains accommodative. Money supply growth is on the rise. The European Central Bank, ECB, is upholding its anti-fragmentation mechanism, and the Federal Reserve continues injecting money through its liquidity window. In short, monetary policy is far from restrictive. Now let's talk about gold. As of mid-2024, gold is trading above $2,400 an ounce, marking a 16.5% increase from January to July. It has outperformed major indices like the S&P 500, Stoxx 600 in Europe, and the MSCI Global Index. Over the past 5 years, gold has outperformed the European and global stock markets, and even the S&P 500, with only the Nasdaq performing better. Why is gold doing so well? In a period of market recovery and stock market expansion, gold serves as a hedge against inflation. While the market anticipates continued accommodative policies from central banks and high debt monetization, gold offers a stable alternative to the volatility of cryptocurrencies like Bitcoin. It's a reliable hedge against currency debasement and inflation, with a long history of serving as an alternative to fiat money. A significant factor driving gold's rise is the increased purchase by central banks. As the market value of government bonds has dropped between 2022 and 2024, central banks are facing losses on their bond holdings. To bolster their balance sheets and diversify away from fiat currencies, many central banks are turning to gold. Central banks around the world accelerated their gold purchases to over 1,000 tons per year in 2022 and 2023, making up nearly a quarter of global gold demand during a period of limited supply growth. In the first quarter of 2024 alone, global official gold reserves increased by 290 net metric tons, the highest increase since 2069% higher than the 5-year quarterly average. The People's Bank of China and the Central Bank of India are the largest buyers, aiming to balance their reserves while maintaining significant dollar positions. China has increased its gold reserves by 16% since 2022, and India added 19 metric tons in the first quarter of 2024. Other central banks, including those in Kazakhstan, Singapore, Qatar, Turkey, Oman, the Czech Republic, and Poland, are also boosting their gold reserves. These moves aren't about de-dollarization, but about balancing portfolios. Central banks are adjusting their strategies after suffering losses on government bonds. They're acquiring gold to strengthen their balance sheets and protect against future inflationary pressures. In a world of high asset correlation and perpetual monetary expansion, gold offers a low volatility, low correlation asset that can enhance any prudent investment portfolio. That's a wrap on today's video about gold's rising role in central bank reserves and its importance as an investment. If you found this information valuable, give it a thumbs up and share it with your friends. Drop your thoughts or questions in the comments below, and don't forget to subscribe for more insights on the latest financial trends. Thanks for watching, and see you in the next video.